China versus Russia. Whose economy is hiding a bigger crisis? On the surface, China and Russia look like two powers defying the West. One manufactures the world's goods, the other fuels the world's conflicts. One claims long-term stability, the other embraces permanent confrontation. Yet beneath the surface, both economies are engaged in the same dangerous act, masking structural weakness behind geopolitical posture. China projects calm, scale, and inevitability. Russia projects resilience, nationalism, and wartime endurance. But appearances are misleading. China's crisis is quiet, bureaucratic, and buried in balance sheets. Russia's crisis is loud, sanctioned, and militarized but also partially exposed already. The real question is not which economy is stronger today. It is which one is hiding a deeper, more uncontrollable failure. Russia has lost access to capital, technology, and markets, but it has adapted through war economics, resource exports, and state coercion. China still has markets, capital, and industrial scale, but faces collapsing demographics, deflation, debt saturation, and a development model with no clear exit. One economy is bleeding openly, the other may be rotting internally. In this video, we move past propaganda, official statistics, and ideological loyalty. We examine how power masks weakness, how authoritarian systems delay crisis, and how economic breakdown looks different depending on whether it is externalized through war or internalized through control. We ask the uncomfortable question few analysts want to answer honestly. If one of these economies breaks not symbolically, but structurally, which collapse would shock the world more? 1. Russia, a war economy that exposed its weakness early. The economic crisis of Russia did not arrive as a surprise. Unlike many states that hide structural decay behind financial complexity or statistical fog, Russia exposed its weakness early by choice. War did not merely strain the Russian economy. It revealed what had already been hollow for decades. The transformation into a war economy did not create new fragilities. It made existing ones impossible to deny. Russia entered the 21st century with a deceptive sense of resilience. High commodity prices masked institutional decay. Energy exports financed state power without requiring productivity reform. The economy learned to survive without modernizing. Growth came not from innovation, diversification, or human capital, but from extraction and rent distribution. This created stability, but also stagnation. The war forced that model into the open. Sanctions did not destroy Russia's economy overnight. That misunderstanding misses the deeper point. Sanctions removed insulation. They stripped away access to capital, technology, and markets that had quietly compensated for domestic weakness. What remained was an economy forced to rely on what it actually had: raw materials, coercive state capacity, and a shrinking labor force. Russia adapted quickly not because it was strong, but because it was already accustomed to scarcity and central control. Capital controls stabilized the currency. Imports were rerouted through third countries. Energy exports shifted east and south. Military spending surged, absorbing labor and output. GDP figures stabilized enough to sustain the narrative of resilience. But war economies stabilize by sacrificing the future to preserve the present. Civilian investment collapsed, consumer welfare deteriorated, technological dependence deepened rather than receded. Import substitution replaced innovation. The economy stopped pretending to compete globally and instead reorganized around endurance. This is not adaptation toward growth, it is adaptation toward survival. The structure of the war economy reveals Russia's core weakness: extreme concentration. A narrow set of sectors, energy, mining, arms production, carry the entire system. Everything else is peripheral. When these sectors function, the state functions. When they falter, there is no backup engine. Energy exports remain Russia's lifeline, but they are also a trap. Discounted oil and gas sales keep revenue flowing, yet lock Russia into a subordinate position in global markets. Pricing power is lost. Technology access erodes. Infrastructure dependency deepens. What looks like diversification is actually dependence with fewer choices. The labor picture is even more revealing. War mobilization, emigration, and demographic decline converge into a structural shortage. Skilled workers leave. Young cohorts shrink, productivity stagnates further. Military employment masks unemployment, but does not create transferable skills. The economy consumes human capital faster than it replenishes it. Russia's demographic crisis predates the war. The war accelerates it. A shrinking, aging population supporting a militarized state is not a growth model. It is a drawdown strategy. The financial system survives only because it no longer performs its original function. Banks are instruments of policy, not allocators of capital. Credit flows to state priorities regardless of return. Inflation is tolerated. Efficiency is irrelevant. This prevents collapse, but destroys long-term dynamism. Russia's crisis is therefore not hidden. It is accepted. This acceptance is key. The state does not promise prosperity. It promises endurance, sovereignty, and survival. Living standards are subordinated to geopolitical confrontation. Citizens are conditioned to expect sacrifice. This lowers the legitimacy threshold. What would provoke revolt elsewhere becomes tolerable here. In this sense, Russia has already passed through its shock. The economy has reset at a lower level of ambition. The question is not whether it will collapse, but how long it can persist without renewal. War economics create the illusion of motion. Factories run. Budgets expand. Employment holds. But this motion is circular. It feeds on itself without producing future capacity. Infrastructure decays. Education suffers. Innovation atrophies. The economy becomes increasingly closed, brittle, and path-dependent. Yet, paradoxically, this makes Russia's crisis less shocking to the world. Markets have priced in isolation. Supply chains have adjusted. Energy routes have shifted. Investors expect volatility. Russia's weakness is visible, accounted for, and partially absorbed by the global system. There is no illusion left to break. This is Russia's strange advantage. By exposing its weakness early through war, it forced adaptation externally and internally. The cost is enormous. But the uncertainty is lower. Russia's economy is not healthy. But it is honest in its dysfunction. It does not pretend to be something it is not. It has chosen militarization over modernization, control over creativity, endurance over growth. This choice ensures survival at reduced scale, but forecloses revival. Russia's crisis is therefore not the hidden one. It is the declared one. And in a world where shock often comes from unexpected failure, the exposed crisis is sometimes less dangerous than the concealed one still waiting to surface. 2. China. The controlled economy that cannot admit failure. The defining feature of the modern China is not scale, speed, or even efficiency. It is control. Control over capital flows, information, labor mobility, land, credit, and narrative. For decades, this control was celebrated as competence. It allowed China to compress time, mobilize resources, and industrialize at a pace no open economy could match. But control has a shadow. When an economy reaches its structural limits, control does not dissolve those limits, it conceals them, delays their recognition, and magnifies the consequences when denial becomes unsustainable. China's current crisis is not cyclical, it is architectural. The growth model that powered China's rise was brutally simple and brutally effective. Suppress household consumption. Channel savings into state-directed investment. Build infrastructure, factories, housing, and export capacity at scale. Use global demand as an external pressure valve. As long as the world absorbed China's output and the population kept growing, the machine ran smoothly. That world no longer exists. External demand is fragmenting. Trade is weaponized. Supply chains are diversifying. Meanwhile, China's population is aging and shrinking. Household confidence is weak. Consumption does not rise to replace exports. The old machine keeps running, but it now produces excess, not momentum. Real estate was the central stabilizer of this system. It absorbed savings, supported local government finance, and created the illusion of ever-rising wealth. When property prices rose, households felt secure. When land sales surged, local governments funded growth. When construction expanded, employment followed. Real estate was not a sector, it was the circulatory system. That system has failed. Property demand peaked, prices stagnated or fell. Developers collapsed quietly, projects stalled. Local government revenue evaporated. Yet defaults were managed administratively, not resolved economically. Losses were hidden in balance sheets. Banks extended and pretended. Data was softened. Panic was suppressed. This is the essence of the controlled economy. Failure is not allowed to appear as failure. it is absorbed, delayed, and redistributed invisibly. The consequence is deflationary pressure. Too much capacity, too little demand. Firms cut prices, profits shrink, wages stagnate, households save more out of fear. This reinforces the downturn. But deflation is politically unacceptable because it contradicts the narrative of stability and progress. So stimulus returns not as reform, but as repetition. More credit, more investment, more capacity chasing weaker demand. China's overcapacity problem is not confined to property. It extends to steel, chemicals, shipbuilding, solar panels, electric vehicles, batteries, and heavy manufacturing. China dominates global supply, but dominance without demand becomes systemic stress. Prices collapse, trade partners retaliate. What was once competitiveness is reframed as dumping. The state responds with coordination and scale, not with contraction. Factories are kept alive. Employment is protected. Export push intensifies. This preserves stability in the short term but locks the economy into a deflationary spiral that cannot end without painful adjustment. The deeper constraint is demographics. China's working-age population is shrinking. The fertility rate has collapsed. The population is aging faster than it grew rich. This is not a future risk. It is present arithmetic. Fewer workers must support more retirees in a system where household wealth is concentrated in depreciating property and social safety nets remain incomplete. An aging society with weak consumption cannot rebalance easily. The policy solution would require transferring income to households, tolerating slower headline growth, and accepting failures that clear excess capacity. These steps are economically rational and politically dangerous. They weaken local power structures, expose past misallocation, and challenge the myth of perpetual ascent. This is why China cannot admit failure. Admission would require acknowledging that the development model has reached its limits. That some investments will never pay off. That growth will be lower for longer. That households must be empowered at the expense of state-led accumulation. Such admissions threaten legitimacy more than recession statistics ever could. Control thus intensifies. Capital controls tighten to prevent outflows. Data transparency decreases to manage expectations. Regulatory campaigns discipline sectors that generate instability or independent power. The state substitutes administrative order for market adjustment. Stability is maintained but at the cost of confidence. Confidence is the silent variable China cannot command. Households do not spend because they do not believe tomorrow will be better. Entrepreneurs hesitate because rules shift unpredictably. Foreign investors reassess risk because exit is harder than entry. None of this produces a crash. It produces stasis. China's financial system reflects this stasis. Banks roll over bad loans. Local government financing vehicles persist despite weak cash flow. Monetary policy transmits poorly because demand for credit is low. The system survives through circularity rather than renewal. This is the danger of delayed crisis. Problems that would be painful but cleansing in open systems become chronic in controlled ones. They do not explode, they accumulate. Internationally, this makes China's situation uniquely destabilizing. The world is not prepared for a China that slows permanently without collapsing. Supply chains depend on Chinese output, commodity markets depend on Chinese demand. Emerging markets depend on Chinese investment. A grinding slowdown ripples everywhere without providing a focal point for adjustment. Russia's weakness is visible and contained. China's weakness is systemic and embedded. The final irony is that control, once an advantage, becomes the barrier to escape. China has the resources to manage crisis, but management without admission prevents resolution. Every year of delay increases the scale of eventual adjustment and reduces the margin for error. China's economy is not about to implode. That expectation misunderstands the nature of the system. The real risk is far more unsettling. A prolonged period of stagnation, deflationary pressure, and tightening control in which growth never quite returns and failure is never quite acknowledged. This is the controlled economy's paradox. It avoids collapse by refusing to recognize it and in doing so, risks locking itself into a crisis it can no longer escape. 3. Two authoritarian models. Two different failure modes. At a distance, Russia and China are often grouped together as authoritarian economies, as if political form alone determines economic fate. This is a profound analytical mistake. Authoritarianism does not produce a single economic outcome. It produces different failure modes depending on how power interacts with production, legitimacy, and time. Russia and China are not failing for the same reasons. They are failing in different ways because their systems are built to solve different historical problems. Understanding which crisis is more dangerous requires abandoning ideology and examining how each system breaks when its core promise can no longer be kept. Russia's authoritarian model is extractive, coercive, and openly confrontational. China's is developmental, administrative, and internally focused. One externalizes crisis, the other internalizes it. One accepts loss openly, the other cannot admit it at all. These differences determine everything that follows. Russia's system is built around power rather than growth. The state does not derive legitimacy from rising living standards, but from sovereignty, security, and resistance to external pressure. Economic performance matters only insofar as it supports coercive capacity. When growth fails, the state does not promise reform. It demands endurance. This creates a failure mode that is early, visible, and finite. Russia's economy breaks openly because the system is designed to absorb shock through repression and nationalism rather than concealment. Sanctions, isolation, and war do not contradict the narrative, they complete it. Scarcity reinforces legitimacy rather than undermining it. When production falls, the response is mobilization, not denial. The cost is enormous. Innovation collapses. Human capital drains. The future is mortgaged to the present. But the system remains stable at a lower level because expectations are reset downward quickly. Russia fails fast and shallow, rather than slow and deep. China's authoritarian model is the inverse. It is built on performance legitimacy. The state promises competence, stability, and continuous improvement. Growth is not optional, it is the foundation of consent. Control exists, not to coerce sacrifice, but to guarantee progress. This creates a failure mode that is late, hidden, and potentially systemic. China cannot afford visible failure, because failure contradicts the narrative of inevitability. Economic slowdown is reframed as adjustment. Debt is relabeled as restructuring. Overcapacity becomes strategic leadership. Each euphemism buys time. But time, in this system, accumulates risk. Where Russia confronts crisis head-on, China diffuses it bureaucratically. Losses are spread across banks, local governments, households, and future growth. No single actor is allowed to fail decisively. This prevents collapse, but it also prevents cleansing. Capital misallocation persists. Productivity declines. Confidence erodes quietly. This difference in failure mode shapes the role of transparency. Russia does not need accurate statistics to function. The system relies on loyalty, not confidence. Markets are secondary. Citizens expect distortion. Truth is not a governing input. China, by contrast, depends on belief. Belief that tomorrow will be better. Belief that policy is competent. Belief that sacrifices are temporary. Once belief weakens, control must increase to compensate. Increased control further weakens belief. This is a dangerous feedback loop. Authoritarian systems are often described as stable. Stability is a misleading word. What matters is how instability is processed. Russia processes instability through violence, repression, and confrontation. This limits contagion but destroys capacity. China processes instability through administration, censorship, and postponement. This preserves capacity temporarily, but allows contradictions to grow larger and more interconnected. One system burns fuel openly. The other stores fuel under pressure. Which is more dangerous? From a domestic perspective, Russia's failure mode is survivable. Living standards fall, the economy militarizes, the state persists. There is little expectation of renewal, but also limited illusion to shatter. The system stabilizes in stagnation. China's failure mode is far riskier domestically, because it threatens the implicit social contract. If growth cannot be restored and denial can no longer be maintained, adjustment will not be incremental. It will be abrupt. Control can suppress dissent, but it cannot create demand, innovation, or fertility. From a global perspective, the difference is even starker. Russia is already priced into the system as a disrupted, unreliable, secondary economy. Supply chains have adjusted. Energy markets have rerouted. Financial exposure is limited. Russia's decline hurts regionally, not systemically. China is embedded everywhere. Manufacturing, commodities, shipping, finance, emerging markets, all depend on Chinese activity. A grinding slowdown without resolution transmits stress globally without triggering a clear response. The world waits for a collapse that never comes, while absorbing stagnation that never ends. This is why silent failure is more dangerous than loud failure. Authoritarian systems are often praised for decisiveness. In reality, decisiveness depends on acknowledging reality. Russia acknowledged its isolation and reorganized around it. China refuses to acknowledge its limits and reorganizes around denial. The paradox is that China's greater competence becomes its vulnerability. The more capable the state, the longer it can postpone reckoning. The longer reckoning is postponed, the larger and more entangled the eventual adjustment becomes. Russia's system breaks bones to survive. China's system numbs nerves to avoid pain. One destroys the future openly, the other risks destroying it invisibly. In the contest of hidden crises, this distinction matters more than GDP figures or reserve levels. What matters is whether failure is processed or accumulated. Russia has processed its failure. China is still accumulating it. And history suggests that accumulated failure, when finally exposed, reshapes not only the country that hit it, but the world that depended on its stability. 4. Whose crisis shocks the world first? Global consequences. The final question is not which economy is weaker on paper, nor which system looks more brittle in isolation. The real question is, whose crisis arrives in a form the world is unprepared to absorb. Between Russia and China, the difference is not magnitude of stress, but visibility, timing, and transmission. One crisis has already been priced into the global system, the other has not. Russia's crisis shocked the world once when war began, when sanctions hit, when energy markets spiked. That shock has already passed through global markets. Supply chains adjusted, energy flows rerouted, financial exposure was written down. Russia became a known risk. Known risks are dangerous, but they are manageable. China's crisis is different. It has not yet arrived as a single event. It is unfolding as a slow distortion of expectations, trade, investment, and confidence. That is precisely why it is more dangerous. Global systems do not collapse from what they expect, they collapse from what they misprice. Russia's economy is now marginal to global growth. Its exports are concentrated. Its imports are constrained. Its financial system is isolated. If Russia experiences a deeper economic breakdown through military defeat, fiscal exhaustion, or internal instability, the shock will be severe regionally, but limited globally. Energy markets would react, neighboring states would destabilize, security risks would rise. But the global economic core would not be structurally altered. Russia no longer anchors supply chains, it no longer drives global demand. Its crisis would be violent, but contained. China occupies the opposite position. It is not marginal, it is central. China sits at the core of global manufacturing, commodity demand, shipping, emerging market finance, and industrial supply chains. It is embedded not as a peripheral exporter, but as a systemic node. The world does not merely trade with China. It organizes itself around Chinese capacity. This means China's crisis does not need to be dramatic to be devastating. A prolonged slowdown, deflationary pressure, weak domestic demand, and falling investment can transmit globally without a single headline moment. Factories idle quietly. Commodity prices soften unpredictably. Shipping volumes fluctuate. Emerging markets dependent on Chinese demand face fiscal strain. Multinational firms revise long-term plans downward. The danger is global stagnation without explanation. Markets are built to respond to shocks, not to drawn-out erosion. When Russia invaded Ukraine, prices spiked. Central banks reacted, governments intervened, adjustment followed. When China slows without collapsing, there is no trigger, only disappointment accumulating quarter by quarter. This is why China's crisis, when fully recognized, will shock the world more deeply than Russia's, even if it looks less violent. The shock would not come from default or revolution, it would come from realization. The realization that China cannot return to its old growth model. The realization that excess capacity will not be absorbed. The realization that demographics cannot be reversed. The realization that control can stabilize but not regenerate. Once this realization spreads, assumptions embedded in global planning break simultaneously. Supply chains that assumed endless Chinese scale must be redesigned at higher cost. Commodity exporters lose their primary growth engine. Emerging markets tied to Chinese credit and construction face balance of payments stress. Western companies discover that diversification is slower and more expensive than modeled. Inflation and deflation coexist across regions. This is not a crash. It is systemic repricing of the future. Russia's crisis produces fear. China's crisis produces doubt. Doubt is more corrosive. Geopolitically, the consequences are profound. A weakened Russia becomes more dangerous militarily but less influential economically. A weakened China becomes less predictable strategically. As growth slows, legitimacy tightens, and nationalism becomes more attractive. External pressure is reframed as hostility. Economic weakness is externalized as geopolitical grievance. This increases the risk of miscalculation not because leaders seek collapse, but because they seek distraction and control. For the Global South, the impact is asymmetric. Many states have already adapted to Russia's isolation. Few are prepared for a China that can no longer absorb exports, finance infrastructure, or stabilize commodity demand. Development strategies built around Chinese growth suddenly lose foundation. For global finance, China's crisis is the unhedged risk. Exposure is deep, indirect, and politically sensitive. Western institutions reduced Russia exposure quickly. China exposure is embedded in indices, portfolios, and supply chains. Exit is slow, transparency is limited, adjustment lags reality. This is why China's crisis, when it becomes undeniable, will feel like a shock even though it has been unfolding for years. Which crisis shocks the world first depends on definition. If shock means violence, headlines, and visible disruption, Russia already delivered it and may deliver more. If shock means structural revaluation of global growth, supply, and demand, China's crisis is the one the world is least prepared for. Russia's failure is loud but localized. China's failure is quiet but global. The paradox is that Russia's early exposure reduced its systemic danger, while China's prolonged concealment increases it. Authoritarian control delayed recognition, but recognition delayed does not disappear. It compounds. When China's crisis finally forces open acknowledgement through persistent deflation, fiscal strain, or social tightening, the world will not react with panic. It will react with recalculation. And recalculation at this scale reshapes decades, not quarters. The uncomfortable conclusion is this: the world has already absorbed Russia's weakness. It is still living inside assumptions built on China's strength. When those assumptions break, the shock will not come as a crash. It will come as the end of an era, and the discovery that the engine everyone relied on had been slowing long before anyone dared to say it out loud.